The tariffs and all the uncertainty they unleashed has led to weakness in Canada. Unemployment on the rise, GDP is faltering. But our next guest says there are signs our economy may be weathering the tariffs better than the U.S. Matt Winkler joins us now, editor-in-chief emeritus, Bloomberg News. Thanks for coming in.
Pleasure to be with you.
Let's talk about what you looked at, first of all, in making this determination.
Well, according to data compiled by Bloomberg, first thing that we see, and anyone can see really, is since Liberation Day, which is when the chaos was unleashed, the Canadian dollar has actually appreciated 3%, and it's among 16 major currencies that have appreciated against the U.S. dollar. You wouldn't expect that to happen because U.S. yields, Treasury yields, went up. So normally you would expect the dollar to be firmer in this environment. But in fact, what's happened is the Canadian dollar has actually been stronger relative to the US dollar since Liberation Day. But the second thing is when we look at the forecasts of economists looking at the Canadian economy, and of course every other economy, their forecasts are actually more encouraging than US forecasts. So something similar is happening, is that the forecast for Canadian growth, for example, is either to maintain the current pace of growth and increase it in 2026 and 2027. Now, before you think, okay, that's not so significant, it would be the first time since 1994 that Canadian growth over 3 years is either maintained or increased and increased. And so that's also something that is happening. Now, what makes the whole outcome of these tariffs even more interesting for Canada is that we look at relative value at the Bloomberg. And so the relative strength, if you like, of Canada is stronger than the US. In other words, when we compare, put the US economy next to the smaller Canadian economy, actually that gap that has existed between the two has narrowed since 2015. So you have Canada actually outperforming the U.S. since Trump became president.
Okay, so right now when we look at it, we see the GDP contracting in Canada, right? 1.6% contraction. Exports to the U.S., of course, down incredibly after sort of that big push out at the start of the year. So when you look at the U.S. and when you look at Canada, they're not we're seeing weakness here, they're seeing weakness there, but our weakness definitely seems weaker, right?
Well, in fact, what's surprising is that the weakness based on the forecasts is actually weaker in the U.S. than Canada.
So is that something that'll change next year?
Well, what the forecasts say is that Canada continues to do better, relatively speaking, to the U.S. over the next 3 years. That's just based on forecasts.
Do you think this will be an unwinding of tariff policy or something else feeding into that?
Well, what is relevant is that the financial markets have yet to treat the tariffs as a catastrophe that was predicted. Not great, by the way, since then, and there's still scope for markets to deteriorate. But so far, at least, Canada, surprisingly, is more resilient than was anticipated, I think, just 4 months ago.
Okay, so that's some good news we can look forward to in the forecasting. You also looked into money managers in this country, which I thought was interesting. Who's at the top at the moment? Well,
you've got 3 firms that are outperforming: Toronto-based Fidelity Canadian Growth, Toronto-based SEI Canadian Equity Fund, and Toronto-based RBC Cube Equity Fund. Those are the top performers in Canada. And, just so everybody understands what we're looking at, there's 69 equity mutual funds that are based in Canada with at least 3 years history and $1 billion of assets, and 50% invested in Canada. So those 3, by that criteria, are the top performers.
Do you see a trend with them?
Yeah, well, what you're seeing with that, yes, exactly. You're seeing a trend, and they are favoring, now this shouldn't be too surprising, metals and mining, and they're lowering their weightings of gas and oil.
Yeah, guess that's not a big surprise. Okay, so you see that they are putting their money in certain things. Are they doing other things that set them apart?
You know, not really. You can't say that there have been any major differences so far in Canadian investing since, say, Liberation Day.
And I'm wondering also, have they changed up their U.S. versus Canada weightings with all of the turbulence we've had this year?
Doesn't look so.
Interesting.
No.
What do you think about that?
Well, as I said, financial markets so far have not deteriorated as many people predicted just 3 months ago. So clearly money managers have had some confidence in what they've been doing for some time, and they haven't changed course.
Why are investors, do you think, as optimistic as they have been this second half of the year?
Well, part of it is AI driven, and that would be a magnet for investing from everywhere. So if you think AI, as many people do, is going to change the course of the way we do everything, work, live, you want to be invested in any kind of industry and company that is related to AI. And Canadian money managers understand that.
I'm just wondering, because you have studied these things for as long as you have, what do you think of the current period and the AI change?
We at Bloomberg are benefiting from our own AI. And I can give you an example of what I'm talking about.
Sure.
Is you probably are not surprised that just about everybody was writing just a month ago, the wheels have come off Tesla and nobody's buying Tesla vehicles, and this is the end of Tesla as we know it. I'm slightly exaggerating, but there were pretty grim stories. We asked our own AI, it's a DSX function on the Bloomberg terminal, so why is Tesla still worth almost 4 times the market value of Toyota? And of course, we got back within 5 minutes a very detailed, attributed, sourced, lengthy answer to that question. And part of the answer to that question is that Tesla isn't just about vehicles, it's about robotics. And the robotics part of Tesla, by many estimates, is worth at least $1 trillion. So if you look at Tesla today, it's still more than $1 trillion. It's still, as I said, roughly 4 times what Toyota is worth.
And it's not about the cars.
And there is AI doing the work that would take reporters weeks, maybe months to do on their own.
Absolutely. All right. Thank you for coming in. I appreciate your time on this.